Okay, let's get officially started, folks. Welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm really excited about spending the next hour with you. I hope you guys are as well. In fact, I'm so excited. I'm so excited that my promise to you today is pretty bold. In this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free, all by building that foundation, how to build and manage your retirement nest egg. And we're going to talk about that today. Again, my name is Jim Penna. I've been here at VectorVest for 16 years now. And I've been, just to give you again some background, I took my Series 7 exam back in 1992. It was a broker for about 5 minutes and realized that cold calling and being a broker was not for me. But I was lucky the firm I was at had a spot on the trading desk assisting the head trader. And that's how I got into the trading side of it, worked on several different trading desks, and then ultimately up until 2001 worked for a larger market making firm before I got tired of shoveling snow up in Connecticut and I moved my family down to North Carolina, the Lake Norman area. So that's my background. Again, I've been in the business a long time, been at VectorVest for 16 years, and it's amazing how your ideas and philosophy can shift from, the trading desk idea or from the what brokers do to what VectorVest actually does, which allows you to become a better investor, to understand how to and when how to know when to buy, sell, and hold. It's an amazing difference in what we do. So let's go ahead and we'll we'll jump in with that. And so it's great to be here. I want to walk through what we're going to look at today. Just kind of our step by step. First, I'm going to talk about the VectorVest 3Ps investing model. So we'll discuss those three core pillars of what we're going to talk about today. Briefly talk about why this is so important, and then we'll get to those core pillars, which is how to protect your assets, how to grow your portfolio, and then also, very importantly, how to generate a safe, steady income in your portfolio. So um, that's what we're looking to do. And hopefully, by the end, we'll stay and answer any and all questions that you guys have as long as you guys want to stay in the room. I'll stay here as long as you guys do. And Bill, the short answer to your question I see in the chat box is yes. But welcome to stick around. I hope you do. But the short answer to your question is yes. Raj is in from Houston. Elaine is here. Okay. You're welcome, Bill. Okay. So if you guys are ready, what I'll ask you to do is turn off all distractions. Listen, I know you're not going to turn your cell phone off, but maybe put it on vibrate, set it aside for a little while, close your door. Try not to multitask maybe as much as you usually do. I think there's some important stuff here, and I don't want you to miss it here today. So with that, let's jump right in. Now, again, I've been here for 16 years. VectorVest has been around for over 30 years. And after decades of working with retirees, we found that what we believe is that the retirement investing model that most people have been taught is broken, right? And this idea of just, buying and holding and, there are different parts to this model that we believe are broken. Times change, the markets change. We believe it takes just a few minor, I wouldn't call them minor, they're important strategies and tactics that you can take to get your retirement back on solid footing. And that's what we're going to do here today. So I mentioned the 3Ps, what we call the VectorVest 3Ps, a model that and we use and have proven to work is the concept of these 3Ps investing. So hopefully you got a piece of paper, a notebook, whatever, a pen, pencil with it. Chart it out with me because these are the three core pillars that we believe you need in retirement. And they are profit, provide, and preserve. The three Ps. When we talk about in this presentation profit, I want you to think about the word, growth, a growth portfolio or capital appreciation, right? It's going to be a portion of your assets that's allocated to that objective, right? So profit, when we talk about that P, it's the plan to grow your portfolio steadily each year. We're going to talk about provide. When you think of provide, think of providing income, right? Generating a safe, steady income. We're going to talk about two sources that you can consider using in retirement. And then finally, and to me, the most important of these three are thank you. I don't know why that keeps happening, John. I hit the button. I'm sure I did to show my screen. I apologize for that, folks. That's my go to webinar. I know I hit the button to share my screen. I'm sorry. The three P's investing model, anyway, I was talking about was profit, provide, and preserve. We talked about growth, providing income. We'll talk about two different streams you can open up for that. And then, as I was saying, is the final P, and the most important to me, right, in my experience, is preservation, right? Protecting and preserving your net worth. Because really, what good is growing it and providing income? What good is all that if you don't know how to protect that core net asset of yours? And just another one quick note I like to share for you guys is that anytime during the presentation it sounds like I'm telling you what to do, it's because 2 or 3 lifetimes ago I was a police officer up in Connecticut. And so when I talk about preserve, I always laugh. It's kind of a joke, but I took an oath to preserve and protect. Right? And I kind of try to continue to live by that oath when it comes to helping you preserve your hard-earned capital. So that's what we're going to do there. Charlie, thanks for pointing that out. Again, I apologize. I swear I hit the button to share the slides. Anyway, let's keep moving on. So we believe that when you apply all three of these core pillars, that's when you'll have the financial freedom to live the retirement that you choose, right? I believe the definition of a secure retirement, or the retirement that you want, is the one that you choose, right? Whatever that might be. Is it, sailing around the world, buying a wine vineyard somewhere? Those are the usual things people talk about. For me, it's, playing around a golf when I want to, a cold beer and a good book on my front porch. It's whatever you choose. So we want you to have that retirement that you choose. So when I talk about financial freedom and peace of mind and all of those things, it's what you choose to have. So why is this important for us to talk about today? Certainly given what the markets are doing and what the environment has been for really the last 2 years now. Okay. It's important because the recent downtrend has maybe wiped away a good chunk of your nest egg, and you're not alone if that's the case. Maybe you're not sure what to do next, right? This is important because, again, we're going to talk about income. Maybe the income source that you counted on isn't big enough, right? And we talk about Social Security at times, and you can't really count on Social Security for your sole source of income in retirement. It's a great thing. You paid into it, you get money back from it, but it's really not, the ideal thing to be able to just count on. The website for the Social Security Administration itself tells you that Social Security was never meant to be your sole source of income in retirement. Right? So this is important so that you can open up those streams of income. And then, of course, we know inflation is an issue. Depleting your savings. I mean, sure, it helps that interest rates are high enough to try to recoup that. But I talk about a number that our founder and mentor here at VectorVest, Dr. Bartolito, talked about. He called it the hurdle number, right? The number that you should be looking at the very least. This goes beyond whatever spending you need to do, is going beyond interest rates and inflation, right? And so if you're looking to do that, you've got to have right now, if inflation's about 3.7, interest rates, we'll call them 5. So you got to make 9-10% now just to keep up with what's called that hurdle number. So you need to have a plan and a process in place. And finally, listen, you probably heard reports that a growing number of people over 65 still have to work, not because they want to. I don't know that anybody here is under that, but we don't want you to be one of those folks. In fact, instead, with the right system in place, your outlook will be a lot different. If I know a lot of folks typed in they were already retired, but you'll be able to have that peace of mind, or if you're not retired, you can enjoy retirement, maybe even earlier than you planned. So, but the key is to enjoy it once you're there, to do the things that you want to do when you want to do them. Again, the choice, right? The retirement that you choose, that's peace of mind. That's a secure retirement. So the key there to be able to do that is what we call, and I'll talk about several of these, what's called a strategic shift. Right? You need to be able to take control of the things that you can control. Now we can't control where the market goes every day. We're not able to do that, and we have to understand what we can and can't control. But you can apply techniques using these strategies to manage your money, as well as, and we'll talk a little bit about it. Maybe you have a financial advisor or somebody else who helps you out. You still need to be knowledgeable enough to be able to look over their shoulder and say, okay, what are you doing? And I'll talk about some examples of that in a moment. But the biggest point here on this slide is the ability to understand that there are things you can take control of, and this is what we want you to do. So I think you're here because you want to take better control. I believe the first thing that you need to understand is protecting your assets, right? To protect your assets. And that is, again, I'm going to use preserve as the first core pillar here that I want to talk about. Instead of worrying about the market falling, wiping away a chunk of your nest egg, you need a strategic defense system. Those who remember the early 80s, Strategic Defense Initiative here. You need that available to you to protect your assets, because a lot of people get caught by surprise when the market drops. I'm going to show you how not to get caught by surprise using proper market guidance, but a lot of people don't use that. And the problem is, after the market drops, right after it happens, you hear people on TV, right, the talking heads and advisors, talk about what you should do, now to try to make your money back, as opposed to what can I do to be prepared and protect it. Right? This has been especially true really over the last 2 years. So the idea here is to understand how to insure your portfolio. You insure your home, your car, your life, your health. And I laugh, my wife and I, we have insurance on our 2 dogs. So we believe that you need to know how and when to insure your portfolio. Otherwise, the growth, unrealized gains is my new approach here. Unrealized gains are not gains. Okay. If you're not prepared to manage your portfolio when the headwinds come, then and you have those huge drawdowns, then you're not protecting your portfolio. So what I want to talk here, I didn't ask this yet. I'm going to ask now as I go into a market timing graph using, this is the VectorVest composite. How many folks in the room are currently subscribers to the VectorVest program? So type in either yes or no. Are you a subscriber to VectorVest? Yes or no? Sorry, I forgot to ask that question. The answers are coming in now, and so far they are all yes. Michael says not yet. Well, hopefully soon, Michael. Okay, they're still coming in. Yes, so it looks like, with the exception of one person, and not everyone typed in, but for the people who did, so there are a lot of subscribers here, so you guys will understand what I'm looking at here. But use this as a good reminder of what you need to do. So here's a look. We're looking at the VectorVest composite from 1999. Now, I know for those who have been investing for any amount of time, I know you've bought or owned a really good stock and watched it drop when the market falls. Even good quality stocks are going to fall when the market falls. We've all been there. But let's zoom in. What I want to do is go just back a little bit and talk about the importance of knowing, like I said, how and when, right? We have to know when it's time to protect our net worth. So let's zoom in on a few of the biggest market moves that crushed a lot of people. Briefly, I'm going to go back to 2000. I'm guessing there are folks in the room here who who experienced the bursting of the dot-com bubble. I was working on the trading desk back then. I remember it very well. There were a lot of people who got hurt badly. I know a lot of market makers on the trading desk, actually, good ones, made a lot of money, unfortunately, for the average individual investor. But we had a customer, Lynn, he had reached out to us way back then during the dot-com boom. He had taken 80 grand, increased it 5 to 6 times. But in 2000, proceeded to lose almost everything over the next 2 years. These are his words, right? He was not happy and he needed someone to blame. And, um, that happens way too much, we believe. You make money during the uptrend, but if you don't know how to protect it, you give it all back and you spend years then, literally years, waiting to recover those losses. Right? And so we want to be able to avoid that. The next obvious one is 2008 when the housing bubble and the financial crisis came. Right? The average mutual fund at that point dropped over 40%. Many people were like a customer of ours, Robert. He said, my retirement portfolio lost 40%. Thought I'd have to go back to work after retiring. Okay. We fast forward up to the COVID sell off in 2020. Now, that was a much more uh, short lived sell off there. But even then, and I'm going to show you how you could have been prepared even for that. February, March of 2020, the S&P 500 itself fell over 34%. I'm going to show you how you could have even been prepared for that quick sell-off. And just over the last year, the market from November of 21 into October of 22 had fallen. We kind of bottomed out. We've had some, guess what you'd call sort of rallies, what I've come to call them now. Overall, we're still in a downtrend, but from November to that low of October of 22, again, the S&P fell 30% there as well. So let me ask you a question. You can type in yes or no also. If you have a financial advisor, did he or she call you leading up to any of the events I just talked about? Right up to November of 21 or even more. David says no. Elaine says never. Nick said no. Bill said not even close. Laugh out loud. Mark said sort of. There you go. At least that's a positive there. Now, listen, I'm not saying all, financial advisors are terrible. And believe me, I'm not out to do that. That can be very helpful at specific times. But again, as I said earlier, you need to be able to have that knowledge and that awareness sometimes to help them and find out exactly what they're doing. Scott said he had some discussion. Julius didn't have an advisor. All right, great. Well, thanks for sharing. So that's what we're looking to do. We're looking to be prepared for these times, right? Which brings us to today. We had, again, the sort of rally last week in the markets were strong. It didn't seem to be long lived, although today. But the idea is overall, there's still a lot of headwinds, and we have to be careful. Now, some people say that you can't time the market, which here at VectorVest, one of the core purposes of what we do is to be able to time the market. The people who say you can't, they can't time the market. And the reason is because they don't know how to, or they don't understand what the phrase means. Because what they think, or what the truth is that you can't predict the market, right? VectorVest doesn't try to predict where the market's going. We recognize short, intermediate, long-term trends so that we can do the best we can to put the probability of you being on the right side of the market well into your favor. Okay? You can always analyze what's going on and follow current trends. Okay, so we do believe that. You don't hear, whether it's from your advisor or the people on TV, talking heads say, hey, again, like we asked about the advisors, talking heads on TV very rarely, and usually it's very late in the game, tell you, hey, maybe this market is going down, you're on the wrong side. Maybe you should get out. Point is, I want you to be very careful about where you get your information. So, what I want to do is look at how to use the right information so you'll never be on the wrong side of the market for more than a week or two. Listen, we're not going to guarantee that you're out at every peak and in at every low point, but pretty darn close. But my biggest concern is that you don't sit through a market collapse and a collapse in your portfolio. So towards that end, what I want to do is, and I'm not going to go all the way back to 2000, but just talk about the guidance that VectorVest has given, the proper guidance and the proper information, so you know when to be protective of your portfolio. So back on November 2nd of 2007, Dr. DeLito wrote, the confirmed down signal that we got could be the entree to a long bear market. Went on to write, don't be deceived by the endless parade of experts who will appear on TV telling you to buy stocks. Not time to buy stocks. Came here on November 2nd. Would that have been a pretty good time to heed that advice, right? That guidance that you got, Dr. You can type in the answer, but I know the answer already. So let's continue on. Now we can look at even COVID, right? Even the COVID pandemic back in 2020. Days before the peak, we noticed warning signals in our market timing indicators. Now we didn't predict that this was going to occur. Nobody knew leading up to those headlines. But our market timing indicators told us that a bearish divergence suggested that downside risk outweighed upside potential. Okay. It doesn't get any clearer than that, right? Is that guidance that would have helped you there? I think it should be. A week later, we talked about our prudent investors should not buy stocks. Aggressive investors and traders should play the market with a bias to the downside. And that was, again, before this sell-off began. And then just in 2021, this is the VectorVest composite hitting an all-time high there. On 11/10, right when we hit that high, we said prudent investors, our market timing indicators were telling us not to buy stocks. Again, aggressive investors and traders play the market to the downside. Then on the 22nd of November, 2021, we got a confirmed down situation. And we said, don't buy stocks. Would that have been helpful to you back in 2021? This one I want you to type in. Overall, and these are just a handful. There's so many of them. These are just a handful of examples. And Julius, we're going to talk about exactly what you typed in. Buying protection. We're going to talk about SPY puts. Okay. Raj says, yes, yeah, it would have helped you. Michael, yes, we have a long, Michael said, so this is the type of insight VectorVest provides subscribers. Yes, we have a very long historical footprint out there. Michael, we don't predict the markets. We recognize short, intermediate, long-term trends, helping you to be careful when you need to be. Raj said he did buy some SPX puts. All right, let's get into it. So get your information right, know when to do it. Now I'm going to spend a few minutes on talking about how we do it here. One way, listen, there's more than a couple of ways to do this, but we're going to talk about using portfolio insurance. What I'm going to talk about can be done on individual stocks, but I've got two other pillars to talk about. So I'm going to walk through this looking at a VectorVest market timing graph. And this is just basically a 1-year look back, a little bit more than a year, I guess, at the VectorVest composite. These are our confirmed calls or confirmed up and down calls. For the sake of the illustration that I want to make here, what I'm going to do is zoom in on the most recent confirmed down call here that we got and talk about some trades that you could have done that we did in our retirement coaching group with live money and to help mitigate damage to our assets, right? That's what insurance does. You own an asset, you insure it because if it's damaged, it helps to pay for the damages. All it is. Okay. So what we did on that confirmed down, or what we're talking about here is buying portfolio insurance. You and some folks typed in SPX. You can use the SPY. It's the ETF that tracks the S&P 500. Either one is fine. You can also use the Qs, which tracks the Nasdaq 100. You could use IWM, which is the 1,000. There's anything that covers the major indexes. I use the SPY. So this is what we're going to talk about now. I just want to share with you what we did. Now, can't do a whole options, course here, or even a module for an options course. But for those who may be new to options, just understand this. Two things very important points I want to make. To do what I'm showing you here, what we did in our portfolio for insurance, you do not need to be an options expert. You don't need to take 14 hours of a class to understand what a put option does. Very quick definition. If I buy a put option on the SPY and I pay for the right to sell for one contract 100 shares of SPY, in this case at $454. The value of a put option rises when the value of the underlying asset, in this case SPY, falls. Right? Again, it's an insurance policy. I get paid on the put option to offset the damages to my asset. In this case is my portfolio. Okay. Now, on July 20th, this was even before, this was a Tuesday during our coaching group. It was a down day in the market. We've had one of those sort of rallies. We had a couple of positions in a portfolio, and I wanted to illustrate how to protect those positions because of the environment we were in. Even though the market was moving up, we had a down day. And as I said, unrealized gains are not gains. You have to be proactive and defend them. So I bought 3 SPY August 454 puts. That's right at the money. And just for those, before anybody types it in, I buy at the money, 30 to 45 days out. Expiration. Okay. That's a good bait. And again, there are other ways to do it, but this is the most straightforward way. These are the ways we actually did it. So bought 3 of them, $5.37 per share, so $1,600 to insure what was roughly a $50,000 portfolio. It wasn't a trade. It was the placement of a hedge or an insurance policy on a portfolio that was long position. What happened? Well, on August 10th, I sold those 3 SPY puts for $9.02 a share for a profit of, I'm going to call it $1,100. The overall positions, they didn't get crushed, but they moved down a little bit and we're able to offset. That's what an insurance policy does. It offsets the damage to an asset. Did it again on September 19th in our coaching group. I bought 2 more. These were 441 strikes because that's where the SPY was trading. This one cost $5.52 per share. Now this one, as you can see what happened, the markets really took a hit, gap down. A risk management technique had me selling those just 3 days later. Why? Because we had over 100%, well, exactly 100% gain. And I only did 2 of them, so I had another $1,100 offsetting the damage to a portfolio. On September 27th, I did it again. This time I bought 4 of them. Playing with house money now, right? We're profiting. I'm buying insurance with the profits from my previous insurance policy. So here we did profit again, but not as much. Sold them at $8, made about $450 on this. Okay. Buying put options on ETFs that track the major indexes, whether it's the Qs, IWM, which is the Russell, the Dow, whatever it might be. is a great way to offset losses in the market. Now, for purposes of clear transparency here, I will tell you in our coaching group, I did buy, after we sold some at a profit, I took some of that profit and bought a couple of more. And the market did have one of those sort of rallies. Our risk management technique had me closing it out, losing $500 or so. So I did give back some of the profit here. And I did it again down in this area when this rally came. But overall, there was over a couple of grand that was, and that's just buying 2 or 3, in this case 4, right? We're still profitable, being able to offset those. It's imperative that you understand how to know when to be prepared and what to do when the market moves against you. We had a driver, a student, Elaine, was kind enough to send me this. He said, Jim, because of your teaching, hedged my portfolio with puts on the SPY, saved a section of my portfolio. He started with just $835 in insurance and then ended up with over $23,000 profits in those puts. Not only saved, but brought positive. So let me ask you, how much would portfolio insurance have benefited you? Whether it was 2020, November of 21, this past month or two. Do you think knowing how and when to place those insurance policies would have? I didn't type in. Because what it does is bring us to our next strategic shift, right? You have to go from being worried and unprepared. Although, let me say this. I like to comment on this. I worry about everything, right? Not in the negative way. Like, I don't sit here and like, oh my God, what's going to happen? I worry in the context of being aware of my surroundings, knowing what I need to do and what I need to focus on. I don't want you to be worried and unprepared. I want you to be aware and know how to employ a strategic defense mechanism. That's right, Julie. Situational awareness. Definitely. Okay, I'm going to shift gears here a little bit and go to the next P, which is profit. Okay, remember I said capital appreciation, growing your portfolio. Let's talk a little bit about the type of stocks and understanding market trends for being prepared for an uptrending market, right? Our mantra here is to buy safe, undervalued stocks that are rising in price in a rising market. For our retirement-minded investors, we want to look primarily at a stock's safety more than anything else, right? So when we talk about growth, safety plays a big part of it. So when we look at returns that maybe we don't want to see, maybe we weren't prepared for some of the drawdowns that we saw, the last thing I want you to do is to think you have to go faster, right? That's the idea behind this slide, right? You can end up trading in a way that doesn't correlate to what your objectives and goals are, right? You don't want to become a day trader or swing trader to try to make money back you've lost in your retirement portfolio. Okay, that's not what you want. You want to allocate money to trade, that's fine. Do it separately. So I use this picture because, you know, I have 2 boys that are older now, but when I was teaching them how to drive, if they were struggling, right, I didn't sit in the passenger seat and yell, slam on the gas pedal and everything will be fine, right? I told them to slow down. So we want to do the same thing. It starts with, again, a quote and something I've heard him say and write many times. Dr. DeLito talked about good portfolio management starts with buying the right stocks. And so I like to use a sports analogy again. I used to have a picture, if there's any New York Mets fans out there, of the 69 Mets here. But the idea is it's just building a roster of stocks is like putting a team on the field or the court or the ice, whatever sport you want to use. You put the best players on the field so that you can win, right? That's how you win games, having better players and the best players on the field. Same thing with stocks. Right? You want a winning portfolio, you have to put the best stocks in play. And What we look at when we talk about safety here at VectorVest is uh, several things. These are just some of the factors that go into our calculations of safety and underlying asset. We talk about earnings consistency. Does the company make money quarter over quarter, year over year? We take into account things like the company size, and a historical look at the price volatility of the company plays a part. A very important part is debt to equity ratio, right? Does the company have the ability to withstand any headwinds, whether it's, the overall market macro headwinds or something specific to that company? They have a strong balance sheet, they can weather that storm better. How long has the company been around? The dividend history is important. But keep in mind, a good safe stock doesn't have to pay a dividend, but if it does, it better darn well continue to pay and grow that dividend. Because as Dr. D used to say, there's no greater black eye for a company than to have to suspend or cut their dividend or cancel it altogether. So that's an important part of our stock safety checklist. So what I want to do real quick is I want to go into the VectorVest program and just take a minute to illustrate for you the power of, of a proprietary indicator that we use called relative safety within our program. And all I'm doing is within the program going to a watch list that I have created to illustrate this here. And what I'm going to do is start with this list of stocks. And what you see here, let me auto fit these columns, are just a list of 40 well-known companies. Companies that, where you've shopped, I've shopped, where you eat, where you drink, what you drink, where you spend your money. Maybe not all 40 of them, but I've spent money pretty much at every one of these. So the idea here is, again, I just want to illustrate to you the power of, of what's called relative safety in the VectorVest program. Okay, these stocks are not just listed randomly. I chose these well-known companies, but we have our flagship indicator called the value safety timing indicator. Takes the fundamentals and technical analysis, puts it into one vector. Right, so the default sort on a lot of things that we do is just the VST descending. Okay. Now, it doesn't matter what day you look at this list, right? I can change that. I'm going to change the date here, and the best combination will come up. But as I said, as a retiree, I want to look even deeper, and I want to look at the relative safety indicator, which focuses on safety more so than anything else, using those factors I talked about before. So what I want to do quickly is I'm going to take this date back. Now, I chose a date. Some dates would work better than others. Don't get too caught up in it. I just want to share with you that over time, if I go back to January of 21, we had strong markets through a lot of 21. We had bear markets, etc. Right? I'm just trying to make a quick point here, the power of relative safety. I've run these same stocks, the 40 stocks, back to beginning of 21. What I'm going to do is click on this button right here, and it's going to sort this 40 stock list by relative safety, again, on a 0 to 2 scale. And I'm bringing up the worst numbers on a 0 to 2 scale, right? These are the top 10 worst RS companies. Let's run the quick test. Now, what happened over that time frame? And again, this is no risk management techniques or anything in place. This is just owning these top 10 of those 40 stocks. Well, not so good, right? You were down over 2% when the S&P 500 was up 19.5%. Again, no money management techniques in play. Now, what if I click RS and sort it the other way? Now I take the safest stocks of this 40 stock list and I quick test those. Well, I outdid the S&P 500. Again, no money management techniques, just simply taking the safer stocks and bringing them to the top of the list. Actually outdid it. Now, the key here is when you build and manage your portfolio, you're not going to just stick to 40 stocks because you've spent money there. Right? So what I want to do is open up the platform to our entire database and take us into the stock viewer page. which back in 2021, I believe we were tracking, change that date back to the same date just to finish up my point here. So same day, this is what the sorting by relative safety, this is what the entire database looked like. The highest relative safety numbers coming to the top of the list, same as the top 40 I showed before. Well, let's go ahead and quick test those numbers. And here, not only did we just outpace the S&P 500, but much more significantly, and once again, we had one stock, again, no money management techniques, one stock really hurt us, but again, even with that, outdoing the S&P 500. That's my foray into the program again, just to give you a very quick glance at what the power of understanding the power of relative safety can do for your. We have portfolios that we track in the program over the last 6 years, up well over 100 or 150%. That's 22% annualized rate of return for our growth portfolio, our ruler stock portfolio. So like I had said earlier, these methods are proven to work. And if you could double your money or have 150 to 200% gain in that time frame, and how do you think that would affect your retirement, whether again you're in retirement or approaching it? And that's just the growth portion here. What you allocate to that growth is going to be up to you, right? The deeper you go into retirement, quite frankly, you probably wouldn't allocate as much to the capital appreciation portion, but you still should have some going there. Because what we don't want is that slow and stagnant movement and the spinning of your wheels in that portfolio. So our strategic shift is to go from spinning our wheels to that steady growth. Now listen, there's going to be drawdown. There's no doubt. Nothing goes straight up. When you couple the safe quality stocks along with the ability to know when to protect your portfolio, you're going to do a whole lot better. Which leads me to the third core pillar, which is provide. Remember, I said when we talk about providing, now we're shifting gears again. And we're talking about providing that safe, steady income. Remember, we said relying on a pension or relying on Social Security as a sole source is not what we want to do. It's great to have, but shouldn't be the sole source of your. So we believe that in order to continue to live the retirement lifestyle that you choose, you need to be able to open up new income streams. This is where I tell a story of a long time ago. We're on the road doing our seminars and things on the road, and I came back and sat with Dr. DeLito and talked about how in some form or fashion at our retirement seminars that folks would ask, well, Jim, how do I keep from running out of money in retirement? Again, in some form or fashion. And I told Dr. D that. In the way only he could do it, he just kind of chuckled. He said, James, just tell him to keep making more money. Right. And it sounds, it's true. I read these headlines, these stories come over and over again to my news feeds or whatever about, the headline is, I just retired. I have $500,000 in my retirement account. How long will that last me? Well, first of all, we don't know how long we're going to stay on this mortal coil, right? As Shakespeare would say. So we can't know that. Right. But what always drove me crazy, and I think what Dr. D was referring to, is that retiree assumes that 500,000 is the only 500,000 they have and that they'll never be able to grow it and they'll never have more money. Fact is that you can grow it through capital appreciation and through new streams of income. So one of the benefits, again, we're going to talk about a good quality dividend portfolio. Okay, so again, we're shifting gears. You allocate now to a dividend, and everybody knows about dividends, we know, but finding the best dividend paying companies for a lot of people isn't always the easiest thing, because what they tend to do is go out and look for simply the highest yielding dividend, right? And there's really a lot of trouble that comes from doing that. Okay? It says nothing about the underlying company. It says nothing about their safety and growth of that dividend. These are just a couple of screenshots. Oftentimes, what will happen, they'll simply sort dividend yielding companies by the highest yield, and that's not what we want. Remember, there's an inverse relationship between price of an underlying ETF or stock and the dividend yield, right? Higher dividend yield could mean that the company is struggling and the price is going down on that underlying stock or ETF. So high yield alone is not what we look for. What I have here is a screenshot I took just last week of a pre-built. We have a folder in our watch list viewer. It's called the the DRIP 25 plus. DRIP stands for Dividend Reinvestment Plan. So all of these stocks give you the ability to automatically reinvest your dividends if you choose to. The 25 plus simply means that these companies have not only paid, but have grown their dividends every year for at least 25 years. You may know them as dividend aristocrats. The difference between this list and what's called dividend aristocrats is the aristocrats have to trade on the S&P 500. There's like 67 dividend aristocrats, right? And you could Google that and look those up. And you can create a watch list right in VectorVest doing that. But for now, we have a built-in one, the DRIP 25 plus. And what you see here are, again, some well-known companies that have, again, not only paid, but have grown their dividends. And when it comes to VectorVest, the ability to analyze dividend stocks is amazing because we have our proprietary numbers here. So important things like the earnings growth rate are very key to finding good quality dividend payers. Because if they're not growing their earnings, how are they going to continue to pay and grow? We look at the dividend yield in VectorVest on a 0 to 99 scale. There's a proprietary indicator called dividend safety. We say anything above 50 is favorable. We look at dividend growth, and then we use a vector, just like the VST. We have a dividend vector, Dr. D created, called yield, safety, and growth. A 0 to 2 scale, anything above 1 being favorable. So we want to find those quality dividend stocks that have that free cash flow, that have that strong growth rate, will continue to pay their dividends, and not only pay them, but grow them. So we focus on that. There's GWW here. I took a screenshot last week of this. We own a small amount of this particular stock. This, again, we have a long footprint. It goes all the way back to 97. And you can see how what we used to call the golden staircase, all those dividends continue to grow. If I had earnings growth rate here, it would show the same pattern, just as that northeasterly direction of the price movement of the stock itself. So when we talk about building quality dividend portfolios, a lot more goes into it than just finding the high. So that's the first stream of income that we talk about. And then the second one is what we refer to as collecting rent from your stocks, right? Stocks you own. You don't have to own them. You could go out and buy them and simultaneously sell a call option against them as well. But that's what we're going to talk about here. Selling covered calls. It is one of the safest option trades available. It's certainly the most popular, most used income trade using options. It's so safe that I tell this story as well, as I mentioned earlier. When I took my Series 7 exam 400 years ago, the only option trade you could do in an IRA was a covered call. Now that's changed over the years, but at that point, it was the only one you can do. And the reason is because it added no risk to your portfolio. Right? The risk was already inherent in the fact that you own the stock. So selling covered calls added no risk. In fact, it lowered your cost basis of the underlying stock and generated income. In other words, charging rent to the stocks that you already own. As I said about options, put options earlier, if you've never traded a covered call or a protective put, please understand you do not have to be an options expert to do it. put a little bit of time in to understand what it is. Now, remember, I'll talk a little bit about it here. I'll show you an example. This is an actual trade that we did a while back in our retirement coaching group. Okay. What's a call option? Well, if you buy a call option, it means you're buying the right to buy an underlying stock at a certain price by a certain date. It's a bullish trade. You believe the stock is going to rise in price, so you buy an option, which is a derivative of the underlying asset. You save a lot of money, or at least leverage, because it's a lot cheaper than having to go buy a stock. That's if you're the buyer of a call option. Okay. Now, let's talk about selling a call option. If I sell a call option, right, I don't have any rights. If you're a buyer of an option, whether it's a put or a call, you have rights, paid for rights that you entered into a contract. If I sell a call option, I have no rights. In fact, now I have obligations. And I'm obligated to provide that stock to the buyer of the call at a certain price by a certain date. So if you don't own the underlying stock, it's very risky. Unlimited loss. Theoretically, you have an unlimited, it's like shorting a stock can be very risky, just as selling a short call, what's called a naked call. We're not going to do that. We're not going to do that. So let me break it down for you. You already own or you simultaneously buy 100 shares of a stock. That's what a contract consists of, the right to buy 100 shares or the obligation to provide 100 shares. One contract. Here's the definition of a covered call. It comes from a book by a gentleman named Lee Lowell. I'm kind of paraphrasing here, but here's how you understand what a covered call is. There are investors out there, someone out there will pay you money today for the right to take your stock away from you at a higher price at a later date. They're going to pay you to take your stock away at a higher price. That's what a covered call is. Now, here's kind of a scenario, kind of a what if situation here. We own the stock at $47, $7.90. I went out and sold someone else the right to take the stock away from me at $49 per share. My objective was not to see the stock go to 80. It was to generate income. It's not the capital appreciation portion of. I was paid $2.27 per share, which right out of the gate lowers my cost basis all the way down to what, 44.60, 73? That money's mine once I sell that call option. How much I get to keep is going to depend how I manage the trade throughout the life of the trade. That money lowers my cost basis, but I have to give up that stock. I'm called away. Buyer of the call exercise. Let's take a look kind of again at a what if scenario. If the stock falls, well, again, as I said earlier, the risk is inherent in the fact that you own the stock. Stock could fall. We're going to have risk management techniques, stop criteria on the underlying stock. However, if it falls just a little bit, remember I have a $2.27 cushion on this example that I showed. So it can go down a little bit and technically I can still make money. Stock could go sideways, in which case at expiration, I'd get to keep the 227. Plus, I could, if I decide, to go out and sell another covered call, since I would still own the stock. I chose to. I could just sell the stock and move on to the next trade. The best scenario is that the stock goes higher, and at expiration, if I held it all the way to expiration, the stock would be called away. I'd get to keep my full 227 bucks plus the $2 of capital appreciation that I was able to. Those are the three what if scenarios. In this particular case study or actual trade that we did, the stock didn't take off, but it did move up. And using our risk management techniques, I was able to sell or close the position, sell the stock, and buy back the call option. for a gain of over $300 in less than a month. Again, it's all about the objective of the trade. This is just one trade. You have a steady process and technique to do this. You're generating income on top of dividend income that you might be generating as well. So, in fact, one of our students, Jerry, um, prior to learning this income strategy, told us these are his words: his investing for income was hit or miss, and he had no methodology. After learning our process, he was able to generate better than 2% on a monthly basis. Just that one trade. So I'll ask you to type in, what would that income allow you to do? Right? As you think about it, type in if you choose to interact with me. But I had an old colleague, since retired, and he always used to love to tell the story. He would sell. He was a big covered call seller. And one day his wife yelled over to him in his home office there from the kitchen and said, "Hey, you better go out and sell some covered calls. The refrigerator just went out." Right? That's the power of covered calls. You sell it, you generate income, you reinvest it, buy new appliances, whatever it might be. But it's a great way to generate extra income. So again, the strategic shift. Clear out that rusty faucet, right? You don't have enough income coming in. You don't want to rely just on Social Security. Get a steady flow. Get several steady flows of income for your portfolio. That's the strategic shift. No income or very little income to a safer, steady flow of income. Just keep making money. So I believe you showed up here today for a few reasons. Perhaps your portfolio is pulled back in this rough market that we've seen. Maybe you don't feel prepared for what's going to happen next. Maybe it is about income. Maybe you're looking to replace or open up those added income streams. I hope that this isn't the case, but you fear maybe you have to scale back your lifestyle, that you don't have to rely on others. Listen, maybe you're doing fine. Maybe you're okay right now, but you're just not quite where you want to be. You want to take that next step, but you don't really have a plan in place to get there. Today, I'm hoping that you learned that you do have the power to take control when you have a clear plan. I hope that you learned today you don't need to be worried about a market collapse when you have the proper guidance in front of you and understand the strategic defense system that I talked about for capital preservation. I hope you learned today that you can open up those income streams between dividends and understanding covered calls. You can get that steady growth. I'm sorry, with steady growth from your buying the proper stocks at the right time and then opening up those streams of income. Getting ahead of myself on the slides, I'm sorry. It can be done. You can do this. You can prepare yourself and build that foundation. Mostly, I hope that you learned here today that the secret to building wealth, transforming your legacy, and living financially free is understanding and make sure that your retirement investing model includes the idea and the concepts of profit, provide, and preserve. So that naturally brings us to the question that you should be asking yourself right now is, how do I create this type of system in my retirement portfolio? How do I do that right now? You have a choice, we believe. You can continue doing what you're doing, do absolutely nothing, right? Thinking that the results will change, but they won't. Fear, of course, is that you'll be in the exact same place this time next year, worrying if you'll have enough money to continue your retirement. You can choose to do it alone, maybe take some of the concepts here, trial and error, try to apply them. But we know what happens when we do that. We don't want you to do it alone. Or you can choose to do what our friend Jerry did, what thousands of others have done, and that is to get right to the solution. Why do all the work on your own when there's a training available that allows you to bypass all the trial and error and gets you to success much faster? Instead of taking that long way, from where you are to where you want to be, learn how to take that shortcut, the straight line, right? Shortest distance between 2 points, you say. Right? That way you get your retirement on that solid footing I talked about in the beginning. So what I want to do is give you a plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. Stay with me for 5 more minutes and I'll talk to you about the retirement portfolio transformation, step-by-step roadmap to your secure retirement. Now, before I do that, I want to be clear. I need to point something out. Albert Einstein said everything should be made as simple as possible, but simpler. It's important that you understand that what I want to talk about for a couple of minutes here is not a get rich quick scheme. It is not some magic pill that in 2 months you'll double your portfolio. You have to commit to it. You have to put a little bit of work into it. You'll be able to meet those goals that I talked about. Put the effort in, you'll see the results. We believe that by transforming your portfolio, you'll be able to live up to the promise I made at the beginning. You want to be able to transform your legacy, create a better life for your children, your grandchildren. You want that financial freedom to be able to do that. So again, it's called the Retirement Portfolio Transformation. Give me 5 minutes, I'll explain it to you. The easiest way to explain the course is to map it out for you. Okay, so I'm going to do that here for you. There are 5 modules. Remember the 3 Ps we set out for. The course is going to guide you through that, through each one. Now, first, what we do is build a strong foundation for your retirement. This is where you'll get a clear sense of your goals, your objectives, right? Because you have to remember, you can have all the goals and objectives that you want, but there's an old saying that says a goal without a plan is just a wish. So you have to have a plan behind that. But in module 1, we're going to show you how to do that. We use you may have heard of the SMART goals, creating a vision statement. Next, we're going to talk about the 3 Ps. First, we're going to talk about profit, right? Growing your portfolio. You have to find the right stocks at the right time and know how to manage them. That's what we're going to show you in your growth portfolio module 2. In module 3, we'll begin the provide portion of our transformation by learning how to build and manage a very prudent dividend growth portfolio. Dividends are a source of income every retiree should take advantage of. But you have to understand not all dividend stocks are created equal. You have to know the proper stocks. So you'll be able to build that portfolio with a safe, steady income. Module 4 is going to go into the part 2. Again, I said it earlier as emphatically as I could that if you're not familiar with options, buying put options for protection, right, or selling covered calls, right? Module 4 is going to talk about covered calls. I'm going to show you exactly what the trade is, how it works, how to set it up, when to implement it. You don't have to be an overall options expert. So we want you to be able to be able to do that, right? We're even going to talk about, selling put options here, not just covered calls. I didn't have time today to talk about that. We're going to talk about that. And then finally in module 5, again, what I said is the most important, I believe, right, is a plan and a process to protect your net worth when the market goes against you. A lot of people will type in, well, what about stop criteria? It helps, and you should have stop criteria, but it does nothing for you. When a market gaps down and stocks gap down, you lose those stocks well below the stop criteria that you set. You have to be prepared for these. That's what module 5 will do. Okay, so that's the program laid out. So here's what I'd like to do. I want to give you access to the full retirement portfolio transformation course. We put the entire course together in a self-paced, recorded atmosphere. Those 5 modules I just showed are in the VectorVest University in this course resource section. You have access to them for 1 full year. You can go back, you could watch them and do all of that. Now, in addition to the course, you get a few limited time bonuses if you register to. First bonus is going to be a lot less than what worth of the number one, bonus one, 5 live mastery support sessions. Okay, you're going to have access to the recorded modules, but in our live mastery sessions, and I'll give you the calendar and time for all of that in a moment, we'll take a look at the things you're doing, the questions that you have, and guide you through the entire process in real time. If we need to go into the VectorVest program, where I use Thinkorswim, we go into our brokers and we illustrate the different trades that we do. Okay, you can also, by the way, if you can't make the live mastery session, don't worry. There's a dedicated email bin where you could submit your questions. We'll answer them live. And we record and archive these. And I'll show you in a moment how to get access to those within the VectorVest University. The second bonus is 5 weeks access to my members only group coaching sessions. Okay. Here each week, you're going to join us and watch me find, select, set up your income trades. Do we need to do protective puts this week? Let's look at all of the important factors that go into that. Do we do our buy right, which is the covered call? How we actually live manage these portfolios done in our coaching group. You're going to have 5 weeks access to that. Again, if you can't make the live session, we record it and we put it into the resources of the course right away. So, and I'll show you all of that in just a moment. Now, the total value of all of that is $4,300, but we're not going to ask you to pay. We have what's called the early bird special, which is good until today at 5 p.m. 5 p.m., that price goes up. However, because you guys who are still here, okay, you order before John and I I said we're going to answer questions and I'll be here for a little while to answer any and all questions. If you purchase now, right, you'll get what we call the fast action bonus and you'll save another $100. You can have all of those things I showed you for just $495. John was kind enough to put that link in the chat box. Okay, and I'm going to click on that link in 1 minute and show you what it looks like. But before I do, understand that, there's people say all the time, there's no such thing as a risk-free trade. Well, this is. Take the course, show you've done the work, put a little bit of effort into it. If it's not for you and you don't think it's what you are looking for, then you can get your money back, give you your money back. That's how confident we are in the process and techniques that we show here. We'll give you your money back. That's how confident we are that the course will what you're doing. So there's an old saying that says the best time to plant an oak tree is 20 years ago, so you can sit under the shade today. Who can type in for me when the second best time to plant that oak tree is? 20 years ago? What's the second best time? The idea here is it's not too late to begin to prepare yourself for your retirement. Mark, thank you. Mark typed it in today. Yeah. Raj typed it in as well. Now is the time to do that. Because what you have to do is ask yourself, how much is it costing you not to do this, not to take control of your retirement and your net worth? And how much did it cost you if you were around in 2000, 2008, 2020, 2021 to now? If it cost you more than $495, it's time for you to fix this once and for all. Time for you to fix this once and for all. Let's make it so you don't have to experience, what happened in 2020, what happened in November of 2020. Let's make it so that this year you begin to safely grow your retirement, generate consistent income, and know what to do when the market begins to move against you. Again, $495. And John, again, was kind enough to put that link into the chat box. You click there, just clicked on that link. This is where it will bring you. And again, you'll see the $495 action bonus that we're giving right now. Okay, and you save $100. If I scroll down, Again, you can scroll through it and it'll tell you exactly what's available to you. I know I give you a headache scrolling through here, but I want to get down to the bottom here to show you what the access and all of the bonuses that you get. Now, if you happen to be in the room now and you're not a subscriber, we'll actually give you 60 days access to VectorVest. Just get through the course. So when you click on that, you can scroll through or you can click here to purchase the course now, and it'll simply walk you through this couple of steps you need to go through. Now, if you're already a subscriber, you don't have to fill this in. Just go to the sign in tab. Okay, and you'll put in your VectorVest username and password. If you're not a subscriber, just go ahead and fill in this basic information and hit submit, and it'll walk you through the process. So again, if you are a subscriber, just simply click sign in, put in your username and password for VectorVest, bring you. Before we open it up to questions is I'm going to take us into the course, and I'm already, because it knows I'm an employee here. So you just follow the process there and enter your information. Now I'm already signed in, obviously. So I'm in VectorVest University. I come down and I scroll through and I have access, of course, to all the courses. But I want to come down and find the retirement portfolio transformation. I click on continue. It's going to bring me into the resources. So this is when you sign in and sign up for the course, you're going to receive an email. Going to give you all of the directions to get into this is the VectorVest University. It will show that you have access to these resources. Start with a welcome video. Let's get started. And then each module, as I noted earlier, is broken down. And I did it a little differently here. We have 4 or 5 shorter videos instead of one long one. And then we have what's called our live mastery session. You'll see when I click there, this was the live session from our last launch. I'll show the dates in a moment. November 20th is our first mastery session. Later that day, this will read November 20th, 2023, and you'll have that day's live version. Okay. So that's what we're going to look at there. Again, each module is broken down here for you, right through module 5. We will have a bonus module scheduled for you. Another step in learning how to generate income. Our colleague and friend, Mr. Ron Wheeler, who just has a great process of selling credit spreads. You want to take that to the next level, we'll have a bonus module for you there. And we have, again, retirement coaching group videos. You're going to be invited to the live session. It's going to start November 21st. It's going to be every Tuesday after that at 2 p.m. Eastern Time. Again, on that date, we will replace this older version with the new one, so you won't be missing out. Can't make the live session. We also have resources here. Click resources. We have some spreadsheets and then slides for each module, everything else you need to complete. Our friend Rob from earlier, he started using VectorVest after the financial crisis, relies on it now, made his money back, recouped his losses using that. $4.95, go to that website. If you have gone, do me a favor, type in 2 words, type in I'm in if you have signed up. To give you a shout out and let you know that what you'll need to do once you sign in is look for an email. It's going to come to you. Check your spam folder or junk folder just in case. But pretty shortly after you sign up, you're going to get that email telling you exactly how to access all I showed you. Maurice is the first to type in. I am in. Welcome, Maurice. Good to have you here. And again, keep an eye out for that email. It should come pretty quickly. It's going to give you all of the access to what I just showed you. Mark says, I'm reading and considering my schedule and availability. Mark, I understand. Listen, life gets in the way sometimes of these things. Just keep in mind that you have access to the, the videos and to the VectorVest University for 1 full year. And if you can't make those live sessions, remember, we're going to record them that day. And later that early evening or in the evening, they're going to be posted there. Jeff says he's in as well. Welcome, Jeff. Thank you. Appreciate that. Again, keep an eye out for your in your emails. Again, check your spam folder if you don't see it in a few minutes. Mark says he is in. Fantastic. All right. Thank you, guys. Appreciate that. That you're in. You're signed up. I truly believe that that the course is going to work for you. Again, we have the money back guarantee if it doesn't. But we have a dedicated email bin. You can ask questions. If you can't make the live session, we record it and put it into those resources I showed earlier. So you're not going to miss anything. Live, at least you'll miss, if you have to miss live, you'll at least get access to it a few hours. This, by the way, is the calendar for our mastery sessions. Going to start on Monday the 20th. 5 live mastery sessions. Again, I keep saying it, but I know the questions keep coming up. We record it, put it into the resources. So later that day, if you can't make the live one, you'll have it. Then on Tuesdays, every 2 o'clock, you're going to be invited to our retirement coaching group. Again, this is where I'll walk through everything that you're going to learn here. All we do in the coaching group is apply it in real time. Right? And our new coaching room is great. You can interact with other members of the coaching group. It's open 24 hours a day. You have a question, you can type it in. I'm not looking at it 24 hours a day, but I'm logged in, and as well as our other members. And so it's a great place to. Okay, so vectorvest.com/transform. Take advantage of this risk-free, money-back guaranteed special of only $4.95 to help you put your retirement on sound, solid footing. John had an issue. John, if you're there, if there's any questions I can answer, I know you were answering some in the background there. If there's anything you think I missed, jump in and let me know. Otherwise, go ahead and get ready to wrap up. I can, John. How you doing? Thanks for helping out in the background there. Level of need take the course. Yeah, I did answer it. I'm more than happy to answer again, and I answered it pretty emphatically. Is that you don't need any prior option experience. I mean, that's why you take the course, because I'm going to teach you exactly what a covered call is, exactly how to set it up, rules to manage it once it is set up. And the same thing for a protective put. You've never traded a put option. I'm going to show you exactly what it is, how to set it up, the exact process that we use to manage it once it's in place. I'm not going to make you an options expert, but I am going to make you understand the it's a necessity in my opinion. If you're here because you manage your net worth, you manage your nest egg, you allocate to the markets. 30 years I've been doing this, 16 years here at VectorVest. You're building and managing your retirement portfolio, and you don't know how to buy a protective put for insurance, you're not doing everything you need to be able to do the task at hand. Whether you learn it from VectorVest or learn it from me or not, it's up to you. You should darn well know how. Teach it risk-free. Anyway, That's my answer there. So Maurice asked, yeah, I was just going to answer Maurice's real quick. Yes, Maurice, if you can't make any of those live sessions that I talked about, every one of them are recorded and put in to the VectorVest course. You'll be able to watch them. And again, remember, you'll have a dedicated email man. I mean, we'll answer the email back to you, and I'll also answer the email. Especially if it's a good question that relates to most people who take the course, we'll answer it in the live session, and then you could watch the recording later. Okay. I'm going to pause for a moment to see if there's any other questions for the folks who remain in the room. Make sure there's no issues. If you try to sign up and you have any issues, you can give our product support floor a call. They'll get you in. And if it's because of a tech issue or whatever, make sure you get the phone. All right. All right, folks. Well, I'll go ahead and start to wrap this up and see if there's any other questions that come in. I'm just kind of pausing to make sure if anyone's having issues signing up for the course or if you have any last minute questions. Again, you can call product support. I would just like to thank you for taking the time to be here. Thank you, John, for helping out in the background and answering questions. Thank you all for taking the time. I hope to see you in the course. I know it's going to make you a better investor. It's going to make you a better manager of your retirement nest egg and your net worth. I don't see you there. Hopefully, we'll see you next time. But either way, thank you for taking the time. Stay safe, stay healthy. We'll see you next time.